back, everyone, to another episode of Sisto Says, powered by Design 2147, a New York City building code and zoning consulting firm here in New York City. Today I have Avi
Borukhov.
Borukhov. There you go, Avi. I apologize. Borukhov, he is the president CEO of his company called Built by Avi. Not only is it built by Avi, but it's managed by Avi. It is all Avi. So, Avi, pleasure to have you.
You as well, Sisto. Thank you.
Thank you. Thank you. So, a little bit of quick background. As always, power of people. You and I met about a month ago at a networking group through Julia.
Yeah.
And we started chatting, and you started to tell me your story. And I was like, wow, this is the perfect guest I need on my show. So welcome aboard, Avi. Thank you for taking time out of your busy schedule. Avi, you got a great story. You know, we chatted offline a little bit. You're in the development world, but tell me a little bit about, grew up in Queens, did some finance stuff, and tell us where you are and how you got to being in the development world today.
Sure. My family and I migrated here in the 90s from a small country called Tajikistan. I've been living here in Queens ever since. Went through public school, through elementary, junior high, and high school. Studied at Baruch College for my undergrad in finance and economics.
Fellow CUNY alum.
Nice. Yeah, and then did some gigs within the finance space. Wasn't really for me, and kicked some tires there, and then went into fintech. Started with implementation there. Then eventually was working there for a number of years and got into sales. So while I was doing there, I kind of wanted to transition to something different. Was getting tired of the corporate world.
Yeah.
Get tired of my the job. I wasn't really happy with myself. And got into real estate.
Took the plunge into real estate.
Yeah. I actually was studying for the exam and went to school after work for about 2 or 3 weeks. Passed the exam, went to get my license, and started an interview with different brokerages and stuff like that. And unfortunately, it just wasn't for me.
Yeah.
But an opportunity came up from the school where we were able to go to Bushwick and Bed-Stuy during 2013, 2014, and literally almost every other brownstone or every other multifamily property was boarded up, or was in foreclosure, or was about to get auctioned off.
Yeah.
So there was a lot of opportunity there, and I was like, this is really what I want to do.
Wow.
Yeah. So I tried to put in a bid on my first property there. It was unsuccessful, unfortunately, but that definitely opened up a lot of doors. And ever since then, I was like, this is what I really want to get into. Met the right people.
Well, it's always about, they say you need to be lucky, but you also have to work hard.
Right.
And I think the work ethic brings the luck, and surrounding yourself with good people that have the same vision and the same passion as you allow that group to succeed.
Absolutely.
A lot of the shows and a lot of the things that we talk about on the show, Avi, and one of the reasons why I asked you to come on the show is because, just because it's bigger doesn't mean it's better, right? Because, we always talk about, oh, well, how about this and how about that? And they're going to build this big building and we're doing a 50-story tower here. But the truth of the matter is my father was also an immigrant from Italy. I was born here, but my dad did. And my dad worked 2 jobs, could barely, read or write in English, and just bought real estate in Astoria. Every dollar he made, he didn't know what the stock market was. He didn't know what a bank was. He'd put it together, and he'd walk around the neighborhood and ask people if they wanted to sell. Right. And that's what he did. He bought them, he renovated them, he flipped them, he kept them, and that's what he did until he was in his late 80s. So one of the reasons I invited you on the show is that not everything needs to be a 100-unit building. And your story is really about, I'm amazed that your portfolio is not like, well, I really concentrate in a story, or I'm really, in, Throg's Neck. Your story is about just finding good deals anywhere. Yeah. So tell us a little bit about how you because usually most developers are like, oh, well, I'm in the Park Slope area, or I'm in the Greenpoint area. Yours is very diversified from Brooklyn all the way to Long Island.
Yeah, so I saw that more from, I looked at real estate brokerages. I know that their, rule of thumb is usually go to a specific neighborhood, target that area, and master it,
Correct.
which I think is great. It's a great business model, but that's not something I wanted to limit myself to, right? I wanted to make sure that I have enough knowledge and expertise across all various asset
Great point.
classes, to different neighborhoods, because every neighborhood is different, right? Not one is
Oh,
alike.
100.
You know,
Listen, we're here in Greenpoint. We're here 30 years. When we
right?
came here 30 years ago, it was all Polish. Now, it's changed.
Yeah,
But the real estate is crazy. I
absolutely.
mean, when we bought this building, nobody wanted to be here.
Right, and I'm sure a lot of the other neighborhoods were similar, right? Especially like Bushwick and Bed-Stuy.
Uh,
During those times, nobody wanted to be there,
I
and
went to
now it's a hot commodity. Like everybody
I went
wants
to
to be
Brooklyn
there.
Tech. All there was were burnt buildings around the buildings from I went to 79 to 83. I was there.
Right.
My father always said we got to buy one of these. And these is cheap.
Right.
But they didn't have what they didn't have was the confidence where you told me you've bought buildings in Bed-Stuy and Bushwick. That's actually where you started your vision.
Right.
A lot of entrepreneurs or real estate developers don't take that chance, but sometimes that's the only chance you get because
Yeah.
that's what you could afford.
Yeah, well, actually, my very first deal was in Rockaway Beach, about 3 blocks away from the beach itself,
Wow.
an up and coming area. And this was before or during the time when the New York City announced that the ferry is going to be built. They're going to have a ferry station in that area. So I knew I was at the right place at the right time.
Transportation's a big thing. We're going to
Huge.
talk a little bit about that,
Yeah,
as we get into the show.
sure. And then it was also a block away from the A train as well.
Right. You had both.
So, worked out fine. But, the only issue that I had was that it was a very small house, 900 square feet, semi-attached, 2 bedroom, 1 bath.
And it was a
Right.
single family.
Single family, yeah. But the ideal part was it was near the beach, which I love.
Yeah.
So summertime, it was amazing. Like,
And you actually live there?
no, I actually spent time, because the house was vacant,
Right. You.
I would able to park my car there and then go walk to the beach. So it worked out pretty well.
That's great.
Yeah. I took a huge risk, a huge gamble on that,
Of course.
and worked out very well. So, and I was grateful for it.
And the experience.
And the experience was amazing. It was very nerve wracking, especially doing the first deal. But then once I was able to sell the property, I was like, I really want to go 100% into this.
Right. So a lot of the stories that I've heard in my 40 years of being in the business and meeting, people like yourself, they start out with the, hey, I'll buy it and I'll flip it, and then they slowly but surely realize that the real money or the real asset has a lot of value with the buy and hold.
Absolutely.
So without really going too far, I'm assuming now that you're doing a lot more of the buying and holding and the renovations versus buying and flipping.
Yeah, I mean, listen, I didn't come from a fortunate background, right? So I had to really start from the ground up.
You had to create your own capital.
Absolutely. So I had whatever money I saved, whether it be in from the markets or from the work I did. I really deployed all of that into that single deal. I took on a lot of leverage as well, and then eventually was able to recoup all that capital back and made a a nice profit.
Right. And when we were talking offline, and stop me if I'm incorrect, but your business model is to find units that can be expanded. Maybe they were 4 3 bedrooms and make them 8 1 bedrooms, or try to stay within the framework of the existing structure. So do you have like a specific model that you look for, or do you just try to make any deal that comes up work? Because sometimes when you only have one model, there's not that many opportunities. They're hard to find. So I'm sure you got to have more than one concept.
So yes, that goes back to what we just spoke about earlier. Is because I have knowledge and expertise in different markets, I'm able to look at different deals and try to structure them in different ways, right? But my goal is to make, the idea is to make money,
Right.
So the idea is to look at different markets, whether it be rent stabilized, whether it be conversion, condo conversion, development,
Any of the above.
redevelopment, fix and flip, right? I want to be a part of those, right? I don't want to just limit myself to just one specific
Well,
type
and
of business.
I think that's really important because, like right now, the rental market is so strong, that no matter where the units are, I mean, almost anywhere, there's a fight to get
Absolutely.
right. So in this market right now, if you have the buy and hold, it's really powerful.
For
right?
sure, yeah, and look, there's two ways of doing it, right? You're looking at for value add, or you're looking for a place to park your money and have good cash on cash returns.
Correct.
So I'm not at that stage where I'm looking for cash on cash returns at this moment where I just park money. I'm here to look
To
for
continue to
value
develop
add. Right.
and build the assets.
Exactly. So I've built my equity this way from the very get-go, and eventually started transitioning into buying and holding.
Which is familiar. Most
Right.
most young real estate entrepreneurs that I've met all started with, hey, we're going to build this, we're going to sell condos, make some money. And then they get a track record. They start to prove
Exactly.
to their investors
Yep.
that they can do this. And
Yep.
then slowly but surely the projects got bigger and bigger. And next thing you know, that they're in it. But yet there are others that have kept that model that you have,
Right.
and they've been successful at it. You did say something to me that I'd like to share with the audience was, so who manages your building? And you looked around and you said, Avi. And I go, wait a second. You said built by Avi, managed by Avi. So Avi does it all. But the thing that was very interesting about the way you said it is that I'd like to share that, which is partnering with the tenants. Now, that's a big concept. It's not corporate America that says, hey, we own 500 units. There's the management agent. Go downstairs, talk to them.
Right.
You're packaged in that gear, your garbage. You're really selling a product that says, you want to come in my building? I want you to be part of that experience.
Absolutely.
I want you to buy in that I love my property, and I want you to love this apartment. I want you to love the building. So tell us a little bit about that, because to me, I can't go through the show without sharing that, because I think that's great.
Yeah, I mean, I've read a lot into this where I was always curious as to how other big real estate moguls that we have here in New York were able to succeed and where they actually started from. And a lot of them started from literally getting their hands dirty, right? A lot of big families, real estate families like Silversteins,
Yeah.
the Dursts. You
Go down the list.
You could go down the list, and they were all heavily involved in the actual deals themselves, right?
Right.
So they knew their tenants, they knew a lot of their properties. Like Sam Zell also, like he knew them one-on-one.
Right.
And I figured, why not, try to do it this way as well.
If the concept works and it's got a track record,
Right.
My dad did the same thing.
Yeah, and all my tenants know me by first name.
That's awesome.
They have my direct line. They call me, text me. Anytime there's good stuff or bad stuff that happens, right? So I'm always there.
Can't
for
always
them.
be good.
Right.
That's real estate, right? It can't be that way.
Yeah. And sometimes I get a little worried when I don't hear much or anything from them. It's like a little nerve-wracking too, but
Right,
it's also
because
good, right?
Right. But again, you also have, and the best part about it is later on, as you continue to accumulate more units and your
Right.
portfolio expands, you have a system that works. And if you're ready to hand it off to the next person to do what you're doing as you move on, you know that what you built is successful and
Exactly.
it's sustainable and
Right.
it works. So, last week, big thing happened. City of Yes got approved.
Yeah.
One of the reasons I invited you is because I think that to the show is that you and I could have a really nice conversation for a couple of minutes about opportunity that's going to come up for someone in the type of deals that you look for. So, you talked about Rockaway having the vision even back then that there was, a ferry coming. So the City of Yes is really a lot about trying to add units in places where they couldn't add units before.
Right.
Wide streets with taxpayer commercials, no apartments above them.
Right.
Close to trains, close to buses, way underdeveloped, right? So right now, last week, when Ashley Donardo from Cozen O'Connor was in, she's a public strategist, heavily into zoning. She worked for the community board here in Brooklyn years ago. Very knowledgeable. And we talked about, this massive change to zoning. Something like this hasn't been done in 63 years. I think that there's going to be a lot of opportunities for someone like yourself where there's these buildings that families have owned portfolios that now have more value and have the ability for people like yourself to jump in and add units to the just market rate units. Now, I'm not talking about affordable. I'm saying just market rate units to all of these pockets of neighborhoods around this city that never had that. So what do you think about it, and have you really dug into it at all?
So I think it's a little premature right now. I mean, it just got approved. I think just like myself and everybody else in the market is waiting for the verbiage
Right.
that's coming out on this.
And the implementation, what's it going to look like?
Right.
What does it really mean? And when we put pen to paper, what
Exactly.
what is it
So
going to really mean?
a lot of it's been speculation up until this point. There was a lot of bigger expectations as to what the city of yes could have been.
Always.
Right.
But that's
So,
politics.
Yeah.
Good, bad, or indifferent. At least they did, I don't want to say at least. They did something. You do have to tip your
Absolutely.
hat to them because status quo means no growth and no change.
Right.
And I don't think, New York City needs something.
No, I think they did the right move here by really spearheading this, and I applaud Mayor Adams and his administration for really putting this foot forward.
Absolutely.
And I know it wasn't easy either, right? Dealing with council, dealing with a lot of constituents, neighborhoods,
Community
and
boards.
right,
Right.
all
Not
that.
every neighborhood wants big buildings.
Yeah, and people like you said are just very used to what they have currently, and they're
Right.
It's kind of hard to change. But in my sense, I think it's potentially a big opportunity.
Oh, I think so too.
Yeah, to definitely develop more, and it doesn't have to be big. Right?
That's why I think that the program. I've been tracking this for 2 years. A year and a half, whenever it first came out. Is that I think that someone who's in that smaller market of taking existing buildings that can repurpose them or add some square footage to them is going to get a lot of opportunities now that weren't available. That's the key.
Right.
It's someone like you that tries a million different things in all different boroughs, including going to Long Island or maybe to Westchester. We talked about Stamford, Connecticut. These opportunities were there in the outer boroughs, but they weren't here.
Right.
New Rochelle knew, hey, we got a train station. Change the zoning by the train station. Now New Rochelle is a booming little city.
Yeah, it's unbelievable.
It's crazy. You can't drive past it where there's down a crane.
Right.
And most of them are New York City developers. They're not all Westchester developers. Actually, 3 or 4 of the buildings that are up there are friends of ours that we've done work here in New York City, clients of ours. So I think that the opportunities, will be there. But we did talk about, a part of the show always is, well, money's not cheap.
Right.
We talked about it.
Yeah.
Bridge loans right now, you're saying you buy a property, you're going to get a bridge loan, 10 to 14%. That's we're getting back where my father was back in the 80s, where it was
Absolutely.
16, 18%. So,
And construction costs also are very high.
oh, it's crazy.
It's unbelievable. So you got a number of factors here, and you have to see what pencils out at the end of the day. So these opportunities are great. I'm just curious to see how much of that will be actually developed on, right? Because of these high costs.
Yeah.
I think there's going to be not that big of a spur or not big of a initial jump.
Right.
I think once the credit markets kind of cool down a little bit.
Yeah, and I think that's going to stabilize.
Yeah.
I think the last time the Feds dropped the rates, I called a buddy of mine because we were looking at some properties, and I said, "So how's it going?" He goes, "Oh, they just raised the mortgage rate." I go, how could that be? You're in the mortgage business. He goes, "Well, Sisto, they had it baked in, and they realized it didn't drop enough. They had to bring it back up." So people, me included, I was naive. I'm like, "Wow, this is great." And call him up. He goes, "It went up 1/4 of a point." I'm like, "What do you mean? How does that happen?" He goes, "Well, because they projected it."
Right.
And it didn't hit the projection they wanted, so the
Right.
rate actually went back up. So if you take interest rates being high, real estate prices haven't come down,
Yeah.
right? I mean, you're seeing that.
It's tough. It's tough to like really pencil out a good deal. It takes more time than normally does.
And thinking outside the box.
Yeah, absolutely. And a lot of sellers are not, they don't have a big need
They're not
sell.
motivated.
Right, they're not motivated to go out there and sell. So that's it's very sticky right now. I'd say
Yes.
so.
But guys like yourself, or teams like yourself, who have financial backgrounds, who then got dirty, know the cost, understand the cost, can project the costs.
Absolutely.
It's not easy to find deals.
No, it's not.
My father did it with no pen and paper.
Right.
He just knew. You could buy a house in Astoria for $200,000 back then.
Yeah.
People said it was too high. My father knew it wasn't too high, and he did all his own. He had little friends of his that, who worked construction, would come at night and plaster and tape and do the plumbing or whatever. They found a way.
Right.
And that old school thinking is still a lot of what some people are doing to make it work. Because
Absolutely.
if you're just going to GC the whole thing out and you're going to just, sit in Hawaii eating grapes while they're building your buildings, they'll never pencil out.
Right.
Impossible.
Yeah. No, I think you got to be more hands-on, especially today. You got to control costs like I do. So a lot of what I've done is, build a team internally,
Of course.
for construction to handle that. The only thing that's hard to manage is the material cost itself. That's something that's you can go from one country to another to try to source out cheaper material, but now we're hearing tariffs. Now we're hearing all kinds of other political.
But it's funny that you bring that up, Avi. So my wife and I raised our family in Stamford, Connecticut, and we had our home,
Right.
and my kids are grown now, and I said to my wife, we really need to downsize. So
Yeah.
she says, I don't want to leave. I love it here. I said,
Yeah.
look, it's time. So we sold our house over the summer, and we bought a much smaller house in the same neighborhood. And I called my buddy today who works for Builders First Source.
Okay.
And he's down south. And we were talking about materials. And I was asking him about pricing, trying to figure out what my budget was. And we were talking about windows. So I said, hey, Freddie, are they is Anderson, don't they usually raise their prices? He says, yeah, usually January 15th. But this year they're going to raise their prices January 1st. I said, oh, why is that? He goes, oh, it has nothing to do with Anderson. He says, the glass manufacturers, only 2 glass manufacturers basically that produce, I guess, for Anderson. I don't
Right.
know the secrets, but... and they are going to raise their prices.
Wow.
He goes, they're raising it to us.
Right.
So we're going to pay. So now
They're
we're
gonna
going to
pass it on
raise
to the
it
consumer,
to
yeah,
you.
yeah.
So he goes, now the question is, they're going to raise it by 3 to 5%. Do we raise it 3 to 5% or do we raise it 10% or 15%? Well, he goes, I don't know. We get the price list from Anderson. That's what we got to sell them at, right? So at the end of the day, the point is that it doesn't sound like a lot, but it's 5% on the window. It
adds up.
10% on the door. It's an extra 6% on the plywood, and
adds
it's the
up.
metal studs. Anything with steel in it's through the roof.
Yeah. Absolutely.
I mean, a 16-foot 2x4 is $16. An 8-footer is like $14 now. It's crazy.
It's crazy.
So when you take all of those factors, this is where we are.
Right.
We're at a point where you can't just be a fly-by-night developer. There's a lot of risk at stake right now.
Absolutely.
Insurance costs are through the roof. Taxes are through the roof. Labor costs, material. We just said, literally, there's not one thing. If I asked you a question right now, so Avi, tell me one thing that came down.
I don't know. I can't say anything that has.
Real estate prices are the same. Labor went up. Materials went up,
Yeah.
taxes went up, water went up, sewer went up.
Everything. It's
and
unbelievable.
And now, like you said, now we're going to get some tariffs. So certain things are going to go up. Right. Certain things may come down.
Yeah.
I mean, we may buy some more American-made products that may be a little bit cheaper, but I don't know.
Yeah.
No one knows that. So as we go forward, we're in 2024. So how many years have you been doing this?
I guess you can say it started when that first opportunity came in 2013, 2014. It's about 10 years.
You're still a baby in the real
Yeah,
estate
absolutely.
world. But obviously aggressive.
Very aggressive. I try to be. I mean, it's only so much you could do on your own, right? It's only so much you can chew at the same time as well. like I've pushed myself to do as many projects as I can. I think in
But
one
within
year-
reason.
Yeah, within reason. I think I did one year about 7 projects at one time.
It's a lot.
That was a lot, and I was like, I don't know if I can do something like that again. But as time goes on, you get smarter, right?
Well, you build smarter, you buy smarter. You
Right.
know, just wisdom comes along, and
Sure.
you know, you kind of get through it. So, as we move forward, 2024, we're gonna end 2024. We're gonna go into 2025 now, and my good friend Andrew Peters from Curry and Brown, who's an estimator, and I always say he's got the toughest job in the world because
Right.
he has to go to someone and say, yeah, you want to build the lab in 2027? It's going to cost you $1,500 a square foot. He doesn't have a plan, but he has to project his past and his forward. And his saying is, you know, the rearview mirror is very small, but the windshield is very big. You're always supposed to look forward, not look back.
Yeah.
So as we look forward, could you give us your personal opinion on where you think the stronger markets are going to be? Are they going to be in Bed-Stuy and East New York? Are they going to be in the Bronx? Are they going to be, you know, in Forest Hills and Astoria? You know, where do you think the opportunities are going to come for a firm like yours as we look forward? Because prices are expensive.
So I mean, you know, I'd love to have a crystal ball, but my hunch is, yeah, I think affordable is going to be a huge component. Affordable housing is going to be very strong next few years because there's not enough supply out there right now.
Hundreds of thousands.
Yeah,
of
demand is
half
huge,
a million.
but supply isn't there. So I think that's going to be a very strong market for. I think what we have in Bushwick, Bed-Stuy, and all these strong rental markets are still going to stay around. I don't think prices are going to go much higher because I don't know how sustainable that is.
I don't know how that was sustainable.
Yeah, and
You can't spend 3 weeks of your salary on rent. I mean,
yeah, there's only so much you can do and so much you can make also at the same time. You know, these guys that are doing gig economies or gig workers and doing extra income and stuff like that, it's great, but the question is how long that's going to last. Right.
The
I
market
think,
gets soft and then it's not available. Then they're in a pinch.
Yeah, and I also think New York City policy is going to be huge.
Yes.
Very important as to where
You need a partnership with people and government. They cannot be independent of each other. We saw the boom with the 421A.
Absolutely.
We've seen other things. I think like you said before, I think Mayor Adams is trying to create this partnership.
Right.
You know, $5 billion is a lot of money, of which $4 billion, they need infrastructure. We need water, we need sewer, we need electric, we need these things to continue to develop New York City.
Absolutely, and I think that will create more jobs. That'll create more opportunities, and I think that's what New York City is looking for. But I think they have to be a little bit smarter with the decisions that they make and the policies that they implement. So I think that's my opinion for 2025. I hope I'm right, and
I'm
we'll
sure
see
you-
where it goes.
Well, and you know, that's the beauty of an opinion. You know,
Yeah.
when you drive home and you're in your car some nights, I know I do it, and I drive by and I watch how New York City has grown from when I started in 1987 to where it is now. You know, in 1986 we started our business, but it just the development of Williamsburg, of Astoria, of Long Island City. I mean, I grew up in Long Island City. I used to go to church with my grandma and, you know, with my nana, and there was just manufacturing buildings. Now there's a whole city.
Yeah.
I mean, it's amazing how policy done properly can create so much economic boom. It just creates so much. So I
Absolutely.
agree with you that policy has a lot to do with it. I mean, there's some zoning changes that are going to be coming. You know, they're gonna rezone parts of Long Island City. They're gonna rezone the Garment District, which is the Midtown. So you know, there's going to be opportunities, but again, sometimes they're only for the big developers, but sometimes they're for the smaller developers too, because there's always the fringes of those things. But my thinking is that we're going to see a big boom in the outer boroughs where they're going to take advantage of these smaller taxpayer type buildings that have a store and 2 units that if they want to go up and it's the right fit, they could add 4 more units. They can build deeper. The zoning is going to allow these things to happen. So I think hopefully that allows someone like yourself to have that extra line item that makes it work and it'll pencil out where before the city of yes, the answer was automatically no.
Yeah. And I hope you're right, and I hope that is what's going to happen. And
Well, they need it.
yeah, absolutely, we definitely need more housing. We definitely need more affordability as well. So we need a good balance of all that in New York City, and I hope that's what's going to happen in the next coming years.
Yeah, I agree. Yeah, I mean, Avi, my last question to you is, so right now, what's the difference between building and partnering with the city for affordability versus market rate? Is it just different programs, different grants, different applying for different, rent stabilization? How do you pivot from doing market to affordable? Is it mostly grants and programs that you enter?
So it's mainly public-private partnerships that are involved with different city agencies and a developer themselves.
HPD and
Right, HPD, NYCHA, it could be any. It's a vast number of. I
so
guess.
so if you're looking at the smaller units, is there ability for that to happen through affordable housing on the smaller units, or is it only for the bigger ones?
It really pencils out for the bigger size projects. Smaller ones, not so much. I mean, I've looked into them. I've looked into other developers of what they did with NYCHA buildings.
Yeah.
Where they were able to take out large amount of units, move them to different units within the same building.
Correct.
Renovate the interior of the.
Right.
Of
We
the,
do a lot of those.
Right, and then basically get those same tenants back into those newer units. They still pay the same amount of rent, but they also get them onto some sort of other subsidy for the difference in.
See,
in
a
the
lot of
market rent.
a lot of times, there's a misconception that the only thing NYCHA does is the buildings that they own, but they have buildings all over the place that are 6 units, 8 units. We do a ton of those, and people don't know they're in the NYCHA program. They're thinking that it's only when they have the 15 buildings all together. So it appears that there'll be some opportunities there.
Oh, absolutely, yeah. I think the more the city works with private developers, I think
partnership.
that partnership is very key to growing within New York. It's like right now, New York City has, I guess, they look at developers as enemies rather than their partners.
Well, I think now they're starting to realize that after the 421A, when they didn't have those partnerships, they lost thousands of units because nobody was building. They went to Westchester, they went to Long Island.
They went to other parts
of the country,
US,
of the world. They're in Nashville, they're in Florida, they're everywhere. Because they had those, development zones that they created, those business zones, and they work. Well, Avi, it was such a pleasure. I'm glad we met.
Thank you.
The power of people gets, for me, always allows people to tell their story. Love to hear your story.
Thank you. Appreciate
it's
it.
very close to my heart with my dad, who did very similar things, and the New York City needs more people like you.
Thank you. Appreciate it.
We appreciate you coming in, taking your time away from doing everything built by Avi, managed by Avi. Avi does it all, but thank you.
Thank you, Sisto. Pleasure.